Okay, guys, welcome back. Welcome back. Welcome back. We are on the mind map, the financial freedom formula. We got Ryan Lee here, and Jimmy, why don't you say hello to everyone?
Hey, everybody.
Excited to have you here, guys. Last time we were talking about really the myth of retirement, and we're going to go into that a little bit deeper. But if you guys want a copy of everything we've been talking about, all the tips, strategies, and tools, and everything we've been talking about, we've created this mind map specifically for you. Text cash flow, one word, to 797979. Cash flow to 797979, and you're going to get access to all of the things that we've talked about here. So with that being said, let's pick up this conversation. Jimmy, what we share with people is the most comprehensive, time-tested strategy to achieve the one thing that people want, which is their time back, right? They want financial freedom. And at the end of the day, I know that word gets kicked around so much, and some people think it's a cliche, but financial freedom is nothing more than you having your time back to invest and use that time to live the life that you love. Quite literally. Would you agree?
Absolutely. Time is man's scarcest resource.
Absolutely. Absolutely. So let's go into this a little bit more. So we're in step 4 in the cash flow banking strategy, and we're talking about this concept of anti-fragile. And we went to this idea that banks are used for short-term savings and the stock market is used for long-term savings. So
we also talked about the fact that savings is a horrible, horrible word when you talk about the stock market. You're speculating, and you can only win one way.
You got it. And how do you win? I mean, this is the crazy part about the stock market. How do you win?
Well, if the Fed inflates the currency, which brings up commodity and asset prices, and then hopefully whatever your stocks you bought, they appreciate more than inflation grows. So you can actually win and say, oh, I made a 5% return this year. But if inflation's grown 6%, you actually lost.
And you brought up a lot of big red flags there, right, Jimmy? I mean, when you're talking about the stock market, you talked about the Fed, you talked about inflation, you talked about, market volatility. How many of those variables do I control, do you control, or does the average investor control?
0. Oh, and by the way, when you're so-called saving and investing, there are people getting cash flow from your investment. It's called everybody along the way is collecting fees.
You got it. And
so there is cash flow in the stock market. It's just not for the primary investor.
Not for you. Not the one who's putting the money in. It's not for you, right? And we recorded a whole video on that. Go back to, I think it's step number 2 when we destroy the myths of the market. But let's talk about this idea. And we talked about people having income that comes in, right? That income, they back out their expenses, and this is their lifestyle. They then start off with their short-term savings goals of putting their savings in a place where they can use their money, and they choose banks to be that location. Now we're talking about their long-term goal. And their long-term goal is most people, I read a survey the other day that said 90% of people do not like, in fact, they actively dislike what they do for a living, trading their time for their dollars. They dislike what they do. And so this concept of retirement is they want their life back. They want their time back. They want control over what they do. My dad is getting ready to retire, and he literally has it on a clock. It's counting down the days until he can retire because he is so sick of what he does with the majority of his time.
Yeah, we did that at West Point. Like when you're a freshman, you have to count down the days till you graduate. And it's absolutely mind-numbing and torturous.
Totally. I mean, why not just shift everything around and live the life that you love today? And that's another rabbit hole. But guys, retirement and saving for education, this is most people's long-term goal, right? They want to buy a house. They want to get, put their kids through college. They want to save for retirement. Now, most people do not use banks to facilitate their retirement or their long-term goals. What is it that most people use?
Qualified plans.
Qualified plans. And the qualified plan is not even an investment, right? Until they then get it into the market, right?
Right.
Okay. So they're using the stock market. They're doing that primarily through qualified plans. Why? Why are they using qualified plans? Why are they using the stock market?
I honestly have no godly idea.
I
know. I think they do it because it's what everybody else does.
Boom. That's it, right? And if it's what everyone else does, it's got to be the right thing. If all of my coworkers and everyone else out there is doing that, why would I want to do anything different?
Yeah, everybody else got on the Titanic without lifeboats. It's got to be safe if everybody else is doing it right.
You got it, man. You got it. And that's the crazy thing. And again, back up in step number 1. That's why you got to download this financial freedom formula. We go through what everyone else is getting from the stock markets, And it's not what anyone wants. So why are we following that crowd expecting a different result? So what we think we're getting from the stock market is we think we're getting our money to grow. Would you agree?
Right.
Okay, so we put our money in the stock market to maybe get some growth. But the downside of the stock market is what?
You only win one way. It's very fragile. If the market goes down, you're hosed. It does not cash flow. The risk is you can only win one way.
Yeah, right. So risk. Now, we talked over here at the bank side, our money's liquid. What if you want to go on a great vacation or you want to buy investment real estate? Is your money in a qualified plan really liquid?
No, the government controls it. You don't control it.
No, and that's the crazy part. I talk to a lot of people and they say they want to invest in real estate, and I ask them where all their money's going, and it's going to a qualified plan. So the thing that they want, they can't do because their money's not liquid. And so we're going to put control in here as well because, man, we don't control anything. So
but
here's
you also put in huge opportunity cost.
Yeah.
Let's say you were Mark Zuckerberg's best friend and he needed 30 grand of liquid capital to be one of the first guys on Facebook. And you were like, sorry, dude, it's in my qualified plan. I can't do it.
Can't do it. And you're right. I mean, there's so many opportunities around us every single day, but most people are blinded to those opportunities because they have no way to transact or to actually move on those opportunities. And it's simply because their money's not liquid, not available to them. Right? Now, here's the crazy part, Jimmy. 90% of people's wealth goes to one of two places, banks or the stock market. 90% of people's wealth goes to bank or the stock market. And here's the crazy thing. When we stack these two up, we choose the bank, right? Because we want our money to be safe and liquid. But we have to accept the fact that we're not getting any growth. So then we go over to the stock market and we choose the stock market to maybe get some growth, but now we have to take on risk. It's not liquid and we lose control. In both cases, we are losing.
And I think in both cases, time's your enemy.
Oh man, that's huge. Right? For sure. In both cases, we're losing and time is our enemy because over here, I mean, you've brought this up a few different times. In the stock market, we're investing for appreciation. And if you're in that game, right, if the only way you make money in your investing is if an asset that you don't control appreciates, by default, you're in the game for 30 to 40 years to maybe have it work out. And you don't find out that it's worked out or not until it's almost too late, right? I mean, the majority of the people that come our way, Jimmy, at least on my end, they're in their 50s and they're pushing the panic button.
Working for 39.99 years. And if the market shits out the day before you retire, you're crushed, dude. You're done.
Yeah.
You're going back to work.
You got it. What are we doing on time? How we doing?
4 minutes left.
All right, cool. We got enough time then. So let's go down this rabbit hole and I'm going to come back to this a little bit more. So the only saving strategy where you don't lose. So we just stacked up where you're always losing. The game is stacked against you. It is stacked against you. There's no other way to put it. So how can we change the rules of the game and use the rules of the wealthy where people are actually in a position of control and they're not losing? How do we change those rules? This blew my mind when I first learned about this, but this is the ultimate financial foundation. So I want to ask you to consider a world that you lived in. What if you could live in a world, right, where your money was in a position where it grew every single year? Do you think that would take a little bit of scarcity out of your life if you knew no matter what that your money was compounding and growing?
I think if you knew time was now on your side, I think that's a powerful position to be in.
Right. Now,
the plan's going to work in an up market, a down market, a sideways market, and it would benefit a little bit from volatility. Yeah, I think that's a much better spot to be in.
Huge. Now, in addition to the guaranteed rate of return, right, I can come up and tell you anything's guaranteed, right? And it's funny, there's this guy that runs these commercials out here on the radio in Utah, and it's a plumbing company. And he talks about his company's been in business for 60 years. And when he gives you a guarantee, he can give you a guarantee that you can trust because his company's been around for 60 years. And everyone else with a guarantee, they come to the table, they make a guarantee, and then they're out of business tomorrow. Right? So how good is the guarantee, Jimmy? Right? You have a vault. How good is the guarantee that you have?
Mine's pretty solid. Generally, though, when I hear guarantee, I think it's bullshit. I just think of Tommy Boy.
Yeah. You've got a company or companies in this case. I mean, we've got a few different ways to do this, but you've got a guarantee that's backed up by a company who is fulfilled on these guarantees for well over 100 years, and some of them are coming up on 200 years every year meeting their guarantee. For me, this injected a whole new foundation, a whole new sense of confidence into my life. I knew that my money was growing. I knew it. And it was backed up by the most successful companies in the history of our country.
That have survived the Great Depression, '08, the stagflation of the '70s. It's always, sometimes winning is just not losing. And so even in those crashes, it just stayed the same.
Yeah, you got it. And that's the cool part about it. I mean, these companies, they predate the Federal Reserve. They predate the stock market. These companies were meeting guarantees before cell phones ever even existed. Computers.
This is another video we've done, but they were created by entrepreneurs.
Yes.
Qualified plans were created by bureaucrats.
Oh, man, that's good. All right, so let's go through a couple of these other benefits in this one. So your money is safe, right? It's not tied to the stock market. Now, I'll never forget how I felt in 2008. Before I was doing what we're doing now, I lost 60% of what I had saved in 2008 because my money was in the stock market in a qualified plan. And I learned two lessons, Jimmy. Lesson number one is I had zero control over the outcome. Zero. I didn't even know what I was invested in, right? My money was in some mutual fund. And number two, I looked at my coworkers, right? I was young still. I was right out of college. But man, losing $60,000 sucked. And I looked at my coworkers.
I'd argue you didn't lose it. I argue you never had it. You just had some blips on a bullshit screen.
That's a good.
You felt like it was liquid capital.
Yeah, good point. Totally. I never even had it, right? But I looked at my coworkers, and those guys were devastated. People who were nearing retirement. And I realized for the first time, I can't continue to do what they're doing and expect a different result. So I moved my money to a place where it's safe. Here's another huge thing. We're talking to real estate investors. We live in probably the most litigious world that we've ever lived in. Your money in this account is quite literally private. It's a private contract between you, a private individual, and a private company backed by a 200-year track record.
Right.
Here's the crazy part, and we're going to go into more details about this. This is actually sanctioned by the IRS. In fact, they tell you where you can put your money to stop paying taxes right now. All of the growth that you're getting, how would that look like? How would that feel like in your financial plan if everything you were getting was tax-free for the rest of your life?
It'd be like Galt's Gulch. It'd be magical.
That would be magical. Last part, controlled leverage. This is what we're going to get into. This is a very, very unique opportunity for you to actually make your money do multiple things at the same time. In real estate, Jimmy, there is a tool called leverage. And what is leverage as it relates to our money?
You're able to borrow against your assets.
Yeah. You can make your money do multiple jobs at the same time. All of a sudden, you will now have the ability to make your money do long-term goals, which is getting ready for retirement, and short-term goals, which is buying real estate with guys like Joint Ops and generating cash flow in 90 days or less. So, Jimmy, that's the end of this one, right? I mean, what do we want to tell these guys?
Go visit Cash Flow Tactics. If you want to get the whole mind map, get on a call with Ryan, get the best financial education out there, and the benefit for you is you will have cash flow within 90 days. I don't know of anything else out there. And I've gone to a lot of masterminds and a lot of courses where you can start day one and expect cash flow in 90 days.
Jimmy, we built this entire course on one principle, right? And it's results. Results for you, right? It's not about high level theory. We're talking about all the details here, but at the end of the day, unless you get results, it doesn't matter.
Right. Unless you get that like $200 of cash flow from your first property, that $200 it'll feel very good. Okay. So all the opining we do and all that is kind of bullshit unless we can produce.
You got it, guys. All right, guys, text cash flow to 797979, and we will talk to you on the next video where we go a little bit further down this rabbit hole and expose to you the power of the vaults.